Hi, my name's Dr. Robert Moorcroft and I'm a Principal Consultant at Tunley Environmental.
And I am Dr. Aaron Yerdley, the Science Team Co-Lead at Tunley Environmental.
Today, we're going to look for the most searched for questions on Google for carbon accounting. And the first question is, why is carbon disclosure becoming more important for businesses? With increasing regulations and stakeholder expectations, carbon disclosure is really important to build trust with investors, with customers, with clients. So this helps with compliance and helps gain credibility. By understanding the carbon accounting framework, businesses will know how to employ it in the context of regulatory requirements and stakeholder expectations.
How do businesses align carbon reduction strategies with global sustainability initiatives? Companies that align their carbon reduction strategies with frameworks such as the United Nations Sustainability Development Goals, also known as the SDGs, really strengthen their sustainability strategy. Emissions reductions directly support SDG 7, affordable and clean energy, SDG 12, responsible consumption and production, and SDG 13, climate action. Aligning with these initiatives improves corporate reputation, attracts sustainability-focused investors, and ensures compliance with international environmental standards.
And next, how does carbon accounting drive innovation in product development? So for a life cycle assessment of a product, you look at the carbon footprint all the way from mining the minerals out to the ground, manufacture, bringing it to your door, you using the product, and then end of life, disposal, recycling, or in an ideal world, a circular economy and back into the system. This picks apart every single stage of the process and really highlights where you can make improvements in that product journey. By doing a life cycle assessment on your products and making those improvements, you can really make your product stand out above the competition and meet that customer demand for more environmentally friendly products.
How can companies integrate carbon accounting into their business strategy? Companies integrate carbon reporting and carbon accounting into their strategic functions. They need to do this by working with accounts, procurement, throughout the business to do it in their operations. We need to make sure that they are doing it monthly, quarterly, and consistently collecting the data what they need instead of just on the ad hoc at the end of the year to tick the requirements needed. Treating it as part of your carbon reduction strategies, as part of your key operational focuses, allows companies to track their emissions, to track the KPIs, collect the data a lot easier, and actually make a real difference. It allows you to calculate the emissions a lot easier. By doing it monthly, you can actually track your emissions, have a breakdown chart, see how your company's reporting, see where your emissions are coming from, and actually make physical changes. You can be much more flexible as a company. You can see how business travel, for example, is affecting the business. You can change policies to ensure that you hit the targets. You make sure that you're collecting the right data. It's by collecting data monthly, it's a lot simpler, it's a lot easier, and it has a lot more advantages.
Next up, what cost savings can businesses achieve by adopting carbon accounting practices? Carbon accounting practices tells you where you've got your carbon footprint, and sometimes that can also be related to cost. For example, diesel equipment is 3 times more expensive to run than electric equipment. So you can tackle both at the same time. Also, in other situations, we're just looking at inefficiencies. By making a process more efficient, you not only save energy, you also, of course, save cost. So the two can be directly linked. So a couple of examples: energy efficient light bulbs will save costs and reduce carbon. Electric equipment is cheaper to run than diesel equipment, and even the basics of insulating your buildings properly can really help both in the long run. Companies that act now on sustainability also gain an edge in regulatory compliance and investor confidence. Next up, what strategies help businesses reduce their supply chain emissions? The main strategy is to engage your supply chain. So look at your suppliers, look at your customers, and see what they can do to reduce their carbon footprint as well. Many large businesses now are choosing to partner with low carbon suppliers. So this is a real driver for sustainability across different sectors. So science-based emission targets align with the Paris Agreement, which is to try and limit warming to 1.5 degrees Celsius above pre-industrial levels. If you apply this across the board, that means that every company in the world would need to reduce their scopes 1 and 2 emissions by 4.5% every year. If you're a business of a certain size, then that would also need to apply to scope 3.
So, what are the best ways to communicate carbon reduction efforts to stakeholders? The best ways to communicate carbon reduction efforts to stakeholders are by translating your carbon footprint reporting into different ways for different audiences to understand. For example, if you're reporting to regulatory bodies, it's very important to ensure that everything in the standard is reported to. This means you've got to have all the 3 scopes, you've got to break down the greenhouse gases. However, if you're reporting to the general public, they may not want to see all that additional information. They will want to be able to visualize your emissions. They will want to be able to really understand it and just know that it's reported to the standards. Therefore, graphs, tables, figures, these sort of things, roadmaps, clear and obvious for everybody to understand, are highly important. The absolute key to communicate your carbon reduction efforts is to be transparent, but also to learn different audiences and understand what they want to see. Employees can contribute to sustainability efforts by really understanding the carbon accounting process. Once they understand this and they learn why they're doing it, the importance of doing it, and then understand the emission hotspots, then nobody else knows the business better. That way, the employees can really engage in carbon reduction strategies and plan actions to hit the targets and reduce emissions.
And the last one, is carbon accounting a valuable skill for career growth in sustainability? So with the current drive for sustainability, increased investment and increased focus, carbon accounting is absolutely a vital skill. It can help you get ahead in your career in lots of different ways, but we're seeing more and more for the managers and director level jobs that carbon literacy is becoming increasingly relevant. Skills in carbon management can lead to roles such as environmental, social and governance manager, sustainability analyst, and many, many more. As global policies evolve, these roles are going to become increasingly important as businesses navigate the space between different reporting standards.